welcome to Mad Money. Welcome to Cramer. Other big friends, hey, I'm just trying to make a little money. My job is not just to entertain, but I'm trying to do some teaching. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The market's got these incredible mood swings. So I say let's be careful. That's the best advice I can give you right now. That and hold on tight. Because we're experiencing one of those moments I mentioned, how to make money in any market. A moment where we could go down a lot and then rebound like crazy. Drone, no drone, boom. It's my job to help keep you in the game so you don't miss that snapback. I don't want you shaking out, even as I don't want you to trade your way into oblivion. No, thank you. And today was a true test of what's ahead, with the Dow sinking 404 points, S&P declining 0.94%, NASDAQ losing 1.02%. A bad day. But we erased a big chunk of our losses from the swoon this morning. How low did it get? At one point, the S&P had fallen from 6,800 all the way down to 6,710. Then we had the furious rally for 68.16. Think about that. Remember, yesterday we started lower until opportunistic buyers came in, because they were hoping this war with Iran would wrap up quickly. When the price of oil soared and then pulled back, the market got jiggy. So anyone who sold near the bottom ended up kicking themselves.
The house of pain.
That's why I've always told you that panic is not a strategy. Today, though, we saw the other side of the coin. The market sagged badly as we recognized that Iran actually had a plan for what to do when their leadership gets taken out. They basically told local military commanders, fire at will, putting thousands of autonomous drones and missiles in the sky. They're using the cheapest rockets possible to exhaust their expensive countermeasures. The launch sites are everywhere, and Iran doesn't seem too picky about what they hit, whether it's oil infrastructure, luxury hotels in the Gulf, or U.S. embassies. The coverage got so negative at one point today that I started wondering if the war might take months, and as we bring in more ammo, or maybe we actually lose. Yes, it read that negatively. The spike in oil had more permanence than the day before. The formerly magnificent seven had no legs whatsoever. Worse, the selling in the hottest semiconductors of late, the memory stocks, Micron, Seagate, Western Digital, CNBC, it was particularly brutal. The culprit. I did some homework with this, and it got me the following answer. Black Tuesday is the culprit. Oh, you don't know Black Tuesday? That's what they're calling the sell-off in South Korea last night, with the index once red hot, plummeting 7.2%. 2 weeks of gains vanished. But don't sweat the Brogomir Cosby people. This thing's up 75% last year, up 37% to date. I mean, even after last night's pummeling. All right, listen. The South Korean market is extremely hot, and it's very active. It's highly concentrated. The two most important stocks, Samsung Electronics and SK Hynix, they make up 52% of the market. Two stocks. Samsung stock fell 9.88%. SK Hynix got hit over the head with an 11.5% 2x4. When we get these kinds of declines, you get a spillover to our stocks here. Some of the spillover might be the selling by Koreans in our market who are trying to meet margin calls in their market. And some of it might be scared holders who watched those two Korean stocks like a hawk and figured something might be wrong. Remember, those two stocks, those companies really do have a corner on memory. I'm going for the margin call theory because there's nothing fundamentally wrong with the memory and data stage core. Nothing wrong with data storage. Everything memory did get crushed. Now, to complete the tableau of negativity, we saw more pressure in the private equity stocks, this time because of redemption jitters from a private credit fund run by Blackstone. Good firm. Plenty more about this pesky negative later in the show. But it's got a lot of the professionals on edge, even if the amateurs have no idea what they're scared of. The only thing green of any note beyond the oil, Target and Best Buy, two once-loved retailers that have provided nothing but worries and headaches about their dividends of late. They both reported strong quarters, and now their stocks are flying. But as the day went on, once again, the oil markets couldn't hold, and they just can't keep their gains. I'm going to talk about that more later on the show. As we got reports the United States might directly ensure traffic through the Persian Gulf. The president says our Navy's going to escort tankers if necessary. Oh, what the heck, why not? And the Iranian missile warfare, the president said that Iran's military has largely been knocked out. Today, a missile strike apparently destroyed the conclave that was supposed to choose their next supreme leader in Iran. I don't know. Seemed negative. Well, then, there's a swing from despair and defeat to victory. Personally, I think that neither assessment seems realistic, but both occurred today. If you took action in the morning, if you did a proverbial get out now, you didn't have time to get back in once the averages started bouncing from their lows. You never do. But if you sold into the strength at the end of the session, I hope you're swift enough to get back in. If we have a decent opening tomorrow, especially if South Korea finds its footing, I don't know if you'll get back in at all. That's why I keep telling you that so many people miss rally after rally after rally. Now, let's talk about what's really going on. Something that could change the focus of the entire market. You know that the tech stocks have been very troubled of late. Enough with the Magnificent Seven. We've got this big four thing going on. Adobe, Salesforce, ServiceNow, and Workday. These are once popular enterprise software companies that are widely thought to be carrion, victims of Anthropic and something called vibe coding. Just consider it as a machine that you can talk to and say, I want you to write code that's like ServiceNow except for better and cheaper. I want sales help, and I don't want to pay Salesforce's exorbitant fees. I can draw. I don't need Adobe. Workday, one step from extinction. That's what's going on. Now, I get that narrative. These companies could see their earnings growth slow because of artificial intelligence. There are ways to create products that might be good or better than the big four. However, it would help to see some real actual weakness in the results beyond what we've seen from Workday, which now has a terrific new CEO, the predecessor of the previous CEO, Aneel Bhusri. Last week, Workday reported what was widely perceived as a disappointing quarter, and the stock still rallied. Salesforce reported what widely was considered to be a not great quarter, and guess what? After it immediately lost $8, it has U-turned. It's rebounded from $181 to $196. Bye. The other three zoomed today, too. ServiceNow soaring 3.5%. Adobe rallying nearly 4%. Workday vaulting more than 7%. Why does this matter? Because there's so much money betting that so much enterprise software will be wiped out by just a handful of AI companies to the point where it could rock the public markets and really create havoc in the private ones, potentially dragging down some major private equity firms and even some banks that loan in that area. Last week, you heard that Anthropic could help you write code that might potentially destroy everybody. But at the end of the week, by the way, Department of War broke with Anthropic. Maybe these stocks are rallying because Anthropic no longer seems invincible. Remember what I care about. I don't want you acting on a U.S. TKO of Iran. I don't want you to think that everyone's out of missiles except the bad guys. I want you to be thinking that these are companies you're investing in, not trading cards. You're shuffling. And if you want to get metaphorical, what retailer would you short coming into the session, given the spike in oil? Probably the one that's most hobbled. I bet you would have shorted Target. Yet Target was one of today's biggest winners, up 6.75%, welcoming a new CEO. Here's the bottom line. If you think that you should be taking action on every drone, every missile, go trade in the predictions market. Get out of our house. That's gambling. I prefer to focus on investing, and that's less connected to the war than you might think, and a lot more connected, guess what? To the performances of the companies themselves.
All aboard! That was easy.
I'm going to go to Steve, my home state, New Jersey. Steve!
Hey, Jim, how's it going?
Steve, it's a great day. How about you?
Hanging in there.
There you go.
My call, yeah, that's all you have to do.
True.
My call today is about Boeing. Despite record orders the last few months, the stock continues to go down. I was wondering if you could explain why this is happening.
Okay, I think it's going down because of the travel and leisure at possibly the end of the bull market. A lot of people worry, Steve, that there won't be a lot of plane orders because of what's going on in the Middle East. I think that's short-sighted. I think that's wrong. I think Boeing should be bought. Plain and simple, big position of my trust. It's the right stock, right time. All right, look, it's hard not to get hung up on all the news out of the Middle East, but you got to stay focused and stay invested. On Mad Money tonight, shares of Cloudflare haven't been immune to the software sell-off, but is this company poised to be a winner from all the AI disruption? I'm checking in with the company's top brass. Then, crude oil's been surging because of the conflict in Iran, but is this move sustainable? I'm going off the charts to find out. And Carrier is undergoing a major transformation under CEO Dave Gitlin, and tonight I'll find out if the stock is ready to fire on all cylinders in 2026. Hint, it's cheap. So stay with Cramer.
Don't Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.